Hello traders. The title of that video is how to avoid Elliott wave extension common trading mistakes. Good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. The financial instrument that we are analyzing today is Microsoft Corporation, an American stock that belong to the technology sector. Right? Previously, I have counted Elliott waves, so this is my first wave of a higher degree. In fact, I need to change the color into black to please our Shotokan black bell. Okay, people out there, one. That's my first wave of a higher degree. So you may be wondering what is a higher degree. We talk about lower degree and a higher degree. All right? Very fast for new traders is you can't wait, for instance, on the hourly time frame, all right, 1, 2, 3, 4, 5, and you compare that wave count of the hourly time frame to the daily chart, wave count. So first you count it on the hourly time frame, then you count it also on the daily chart, then you compare both. Okay, wave count. The hourly time frame wave count is a lower degree wave count in comparison to the daily chart. So in that context, we can say that the daily chart to a certain degree is a higher degree wave count in comparison to the hourly time frame. Okay, wave count. So I'm on a monthly chart with the Microsoft. This is my first wave of a higher degree. So in higher degree, I'm referring to the yearly chart. Right? Higher degree. This is my second wave of a higher degree. Yes, in fact, it's somewhere here. I forgot to put it there. Hold on, please. I'm going to do it in a minute. Also in black to reflect the higher degree or the black belt, the Shotokan. Martial art people out there. Don't mess up with me, guys, alright? Don't be afraid, okay? So previously we said that the second wave is subdivided into 3. W, X, Y wave. Beautiful. Microsoft, beautiful. First wave followed by W, X, Y wave. If you don't know what is the W, X, Y wave, alright? Just go to 24 Elliott wave. Don't go to another website. If you to give you the suggestion, look for the one that is saying 24 Elliott waves. Okay, digit 2, digit 4 Elliott wave, and watch only the playlist of 24 Elliott wave. That is to make you laugh a bit. Why not? We want people to watch our video. Oh, why not? WSY wave for me the second wave, and we said to traders that we are now in the third wave. Didn't we say that? Yes, we did forecast that this is the third wave for Microsoft, but there is a problem. Somebody is trying to hack into my computer. Can you see that? You don't need to hack into my computer. All right? You don't need. There's nothing on this computer you can see. Yeah, we are just recording video. All right? Waste of time. We hack other computers. Now, so previously we said that we are in the third wave, and we said that that third wave has been subdivided into 5 minor waves. So, first minor wave in red, second minor wave in red, third minor wave in red, fourth minor wave in red, and the fifth minor wave in red. And at that point you can see that's why I don't remove my lines on the chart. And I was telling traders that prior to bullish signal above that level, 8441, didn't I say it? Correct me in the comment section. I did, yes? Prior to bullish signal above 8441, because the line is still there. And prior to bearish signal below it, understand, which I always say to traders, that when we are in anything called first, third, and fifth wave, whether it's a higher degree, lower degree, or minor impulse wave, those first, third, and fifth wave can be extended. This is one of the challenges that Elliott wave traders are facing and the Elliott wave analysts are facing. They are aware of it. Sometimes they don't mention it. I try to mention it all the time in my video. Anytime we are calling something end of the third wave or end of the first wave, end of the third wave, end of the fifth wave, whether it's a minor wave or anything else that is impulse wave, you need to understand that impulse wave can still continue to go out, which we call the Elliott wave extension. But looking back again, as I don't say to trade a palatable signal above, a palatable signal below 8441. I told you that there is a resistance. You see the market geometry. We were projecting this channel here. You see this channel? Market geometry, right? The right channel. Can you see it? Can you see? Well, you got this one. I'll show you in a minute, okay? That's the first channel. That get attention. This line, the top of the first channel, the lower part of the channel. And then we project using market geometry. You see, George, I never heard about market geometry. You to search market geometry by Day Pro Traders YouTube channel, or go to www.dayprotrader.com. Start learning about market geometry. You allow how to also to focus the market and to set a price target level. And now it breaks above it, we can project it again like this. And again, we draw a line that is parallel to the first one. So traders that has started incorporating market geometry to their trading, we see a great improvement. You see here, you see the third projection, how the price went to retest. You see how the market geometry can help you to set target, price target level. Boom, how? Why they sold it here? Because they projected, they know. Computers can do that, human beings can do that, professional traders are doing it. And anytime we see two lines, we have a permission to draw a median line. So the blue line here, that's the median line. So what is happening now? He breaks it below that median line and retests it. What the price doing all the time? Break above, retest, break below, retest. Did you see this one? Break above the median line, retest, went up, break below, retest. What are they doing now? The market is not yet closed. It will be closed in the next 38 minutes on the 1st of February, Friday the 1st of February 2019. And here it is. Break below, retest. It's a bearish trend setup. That monthly candlestick bar is now closed. So people are now implementing what we call a top-down trading method. Look at those bearish glass. Look at that. See all the edge gap down. And now, if you want to investigate why they are doing this here, you can go and use. Oh, what have I done? All right, so those one. Now, a trainer teach me something last time. He said, Joe, you say as if with TradingView. He showed me how to do it, and I've done it with TradingView to get the team back straight away. Excellent tips for TradingView, by the way. You say, whenever you say, Joe, whenever you say, what have I done? You can just, okay, I've done it, I'll reset it. Okay, so yeah. Drop it for two like this here. Okay, there it is. Okay, selling it down, like you know, there's all kind of bearish pattern in a resistance zone. Those are high probability setup. See a bearish chart pattern in a resistance zone. Well, you don't need my permission to implement a top-down trading method, okay? Enough for my blah blah blah. So you see now? That's why we are seeing all these bearish trading setup we were forming above. You can see they start forming the top and they're pushing it down. Say, Joe, thank you very much. You said to me to sell Microsoft. No, I didn't say that. Right. So, how to avoid area wave extension common trading mistakes? Like I said before, any impulse wave can be extended. So that's why whenever we call something, okay, end of the fifth wave, end of third wave, end of first wave, we draw a line. That's what we do. Always draw a line. As you can see here, the price breaks above that 8441. Breaks above. We test. There were orders here to buy, which everybody was expecting to buy. So they say, I'll put the order there. If you feel it, you feel it. Order will feel. long tail piercing to a key level. Next month, some people try to sell it, and then it is went to the next target level using market geometry. So we have an Elliott wave extension. Now understand what is happening here, my friend, because I don't want you to get lost, okay? Don't get lost. We are in a third Elliott wave for Microsoft. Did you know that? Microsoft stock is in the third Elliott wave. You can quote me on Twitter or Facebook. That third wave has started since 2009. And that third wave is subdivided into 5 minor waves, which we put it here in red. All right? We are accurate Elliott wave forecast traders. Ha 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 ha. You can be proud of yourself. So at this junction, we thought that this is the end of the third wave. Why? Because we went well at 161.8%. Can you see that? Can you see? Can you read it? 161.8% Fibonacci extension level of the first wave. And no more third wave. Usually we stop at 161.8% Fibonacci extension level of the first wave. 11 minutes. All right? But we also know that, okay, the fifth wave, so this fifth wave is the fifth minor wave of the third wave of a higher degree. So we are in a third wave which can be extended. We are in a fifth minor wave of the third wave. That fifth minor wave can also be extended. And here we are after a few months, right? And here it is going up. It's just going up. This is what we call Elliott wave extension. The mistake that an Elliott wave trader will make at this junction is to say, all right, my wave count is excellent. First wave, yeah, W as my wave. 1, 2, 3, 4, 5. Exactly. 161.8. Yes, George, you are the man. I'll buy, put option, shout and forget. I'll go on Twitter, on Facebook, on Tumblr, everywhere. I'll tell everybody that Microsoft will go down. Did you see the line here? We did put a line here. And there's a high chance that Microsoft will pull back a bit to retest this low here. You see? That's why I don't remove the line. So that's what I'm talking about. So we forecast the market. We don't assume anything. We don't want to pressure the price and say, now is the time for you to calm down. You must calm down or I punish you. No, you don't have to punish the price or the price may punish you. All you have to do is to flow with it. And that's why we say price to bull signal above, price to bear signal below. Looking for trading setup, map out the chart, and then implement the top-down trading method to trade it. If it continues to go up, it did now in this case, you just flow with it. And here it was nice because he embraced the ball with 90 and then retested gently. You can see that people bought with this long tail. Some people miss that opportunity. They push it back again to retest it properly. So there were other people waiting to buy, which means there were more orders here to buy. Do you know that market orders attract the price like a magnet? More orders, so the price came back to fill those orders and then brought it to the target level where there were orders to sell. Do you know that there were orders here to sell? Yes. Well, do you need level 2? No, you need market geometry and the price action alone because people knew that there was a target here using the projection of that channel. You see? Embrace the ball of the second channel and retest it. Did you see that? Embrace the ball of the media line of the third channel, retest it. That embrace below it and retest it. Use a different time frame trading method to trade it. So the mistake that the Elliott wave trader will make is to just sell here and forget. In the old days, that's how everybody was trading. So people will go and purchase the Elliott wave forecast. They say, you are the guru. You say that the market will go down today and we're all going to sell. Or you say that the market will go out for 10 years without pulling back in a straight line and we will buy and hold. And now people forget that we are in 2007, 2008 and the market went down. Everybody's crying. Don't cry. All right? You see? So this is something that can help you to avoid the Elliott wave forecast. So to summarize this tutorial, You call something fast, third, fifth, with a minor or a higher degree wave call, right? Especially during the third wave. You can really understand it. This is not a surprise at all. Okay, can be understood. When you see it, draw a line. That's why we say we must adjust our earlier wave count to the new reality of the prime, one step at a time. At that point in time, it was correct. And here we are. Do we have any earlier wave violation? If we call this one now the fifth minor wave or the third wave, is the third wave the shortest? No, it's not the shortest. Because started from here, choo, 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 also subdivided into 5 minor wave. All right. In comparison to the first minor wave and third wave, we do not have any earlier wave violation. Where are we now? That's a very good question. All right. So draw the line prior to bullish signal boom. Map out the chart. Use market geometry, you see here. So it's going up. There's a target there. Yeah, that's where it stopped. You will be looking for, so if you were here, you bought it, you will say midpoint target, first midpoint target, ultimate target, the top of the projection, yes or no. And before you will challenge this price move, the minimum requirement will be something like this. See that trend line that I draw along that price move. And there is another one here that you can draw also, quite close to the price. That will, okay, hold on please. Very close to the price. You see, before you even consider to sell. Okay? Because it was riding this first trend line, and then you speed up before you see the angle. That angle is representing the intensity of the bullish momentum. The wider the angle, the stronger the momentum, the speed. So the angle is wide, the price from a higher low above it. You don't need my permission, that's a high probability to set up. It's speeding up. See now? So here I retest that one. Shh. Look where it stopped. See that one? That common certain that we draw first? Is it retesting it also? Yes, it's retesting. So if you are selling that media line that we mentioned before, what's the next support? That trend line there. It can break below it, retest again. The candlestick bar must close like this one close. If you want to play it at an early stage, what you do? Go to the next lower time frame, weekly chart or daily chart to look for your trading setup. Sometimes they jump on the trading setup. The thing that is cooked is ready, but it's not ready yet because the candlestick bar is not yet closed. Right? So map out your chart. So you see here how the price did extend. Sometimes earlier we traded forget about the earlier we were station, and the price will slap them all over the place, from the left to the right, all over the place. And they keep repeating the same area with extension, common trading mistakes, and they don't realize what they are doing. Or sometimes traders get confused. So they pound away, now something has changed. The extension has taken place. So, or some traders always remove their line, or they try to hide, or if they are anyway expert, they don't want people to see what has happened before. I leave all my line, and you can see them here. They're all here. So that's what I'm telling you now, that the music has changed. My fifth minor wave was here before. Where was the 8-4? Is that it? No? Now the music has changed. 8-8-4-7. No, it should be there now. Adjust accordingly. All right? So, another mistake that I want to point out, so this video is so important, so we're going to go over 20 minutes, though I was thinking to keep it short. My apologies to traders. I don't want to stop in the middle like this because I haven't finished. Right? So stay with us, please, okay? Another thing that is happening here is that you have to remember that I said to traders at the Day Pro Trader YouTube channel, right? That the bullish or the breakout point, you're talking about Fibonacci extension level, at which level? If you don't know the correct answer to those essential questions, what are the Fibonacci extension breakout level? Now, traders that are following us at Day Pro Trader know that. 161.8%, 261.8%, 361.8%. Any Fibonacci extension containing 1.8, breakout zone. So when we are saying that we have ordinary, normal third wave, normal stuff, we usually stop at the 161.8% Fibonacci extension level of the first wave. If you understand also that usually bullish breakout usually take place at 161.8% level, if you see that break above and retest with that long tail, you know that they are cooking something that looks bullish than bearish. Or then you want to use a different time frame method to improve your timing in your wave theory in conjunction with the multiple time frame trading method after mapping out the chart to identify the high probability trading setup on the edge. So 161.8%, 261.8%, 361.8%, those are the level that Elliott will trade must watch because those are breakout zones that can create an extension whether in an uptrend or a downtrend. We also talk about 138.2% level, and we talk about 161.8. That if you find a resistance at 161.8% level, in an uptrend, if you see a bearish chart pattern at 161.8, at 261.8, at 361.8% bearish chart pattern in that zone, it's not good. We're expecting a breakout. Now we are seeing a bearish. It means that probably we'll see instead a reversal, which is the negation of the breakout. Or negation. Oh, those who are using a difficult word. Yes. Google it, please. I used to make you laugh a bit. All right, so be aware of the Fibonacci extension level. Okay, where the breakout usually takes place. I'm not saying that definitely breakout will always take place at those levels. You need to be aware that frequently, regularly, often, we usually see a breakout. In this case, it did happen, and it pushing up. Price at which level now? 214. What have I said to traders at day 4 traders? YouTube channel about 114% Fibonacci extension level, 214% Fibonacci extension level, 314% Fibonacci extension level. There is a playlist about those Fibonacci extension level ending with 14. Oh, you say, Joe, you are shouting. Oh, I'm not shouting. I'm getting hungry, that's all. Or, you live in India? I like chicken biryani. We are in London where we eat too much chicken biryani. Biryani, I love that. Oh, anytime. Can you send it to the post to me? Okay? So the Fibonacci extension containing 14, 214, 114, 314, those are purposely. So if they want to sell, all right, they will stop the price at those Fibonacci extension level. 114, 214, 314. If you see a bearish, because if they are talking about hedge fund, okay, the market mover, those who can move the market. I'm not talking about ordinary traders. Okay, those the dominant force that is trading macro stock. If they want to stop a move that is going up or down, watch out for those 1-4. Why are they stopping at 2-1-4? For the third wave, looks to me, I can deduct from where we are now at that 2-1-4 is a high chance that we are now in the fourth wave for macro short. So, again, to avoid a common area with extension mistake, allow me to do another line there again. You see? Oh, let's color it now into pink. All right. I'm going to make that line really thick. All right. 114. Remember, this is 214 Fibonacci extension level, a little bit below. And the key level to watch is also 11466. What's going on? 14141414. 11466. Priority to bullish signal, you see, always you have to say to traders, if you are dealing with analyst, priority to bullish signal above 11466, and prior to bearish signal below 11466. Looking at this price structure for Microsoft, I can forecast There is a high chance, not guaranteed, as we said before, that the fourth wave is now brewing. Probably is cooking now. It's starting. We need to be careful. Right? But if you brace about that peak line, and the support, don't fight it. Don't fight it. Don't say, John, you are the man. No, 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 no. Compare your wavefront to mine without assuming anything. So what I will do at this junction, you say, John, you use that word all the time. Junction, junction, junction. There is a place in London here that they call Clapham Junction. There are places in London with a name Junction, Junction all over the place. So probably that's why I like a junction. At this junction, careful please. I'm going to color my new Fibonacci into green. I will highlight too. In fact, I'll move that peak line, this one here, move it down a bit to 38.2% Fibonacci extension level. That fourth wave can come down all the way here. Minimum or preferably, okay, we will prefer 38.2% Fibonacci retracement of the third wave. Doesn't mean that that's exactly what's going to happen. So, John, we see that all the time. The reason why I say it to new traders. I remember when I was new before, sometimes I believe things, don't believe anything. Okay? Probably we are now in the fourth wave. We will see if that is the case. So we may have a fourth wave that may stop somewhere here. Doesn't have to come all the way here. Can come below even that level. Come all the way here. So it's not that definitely will stop there. But we don't want it to go below the 50% Fibonacci retracement level of the third wave. I don't like that. If I see a fourth wave like that, it makes me a bit edgy. Oh, George, what do you mean by edgy? I don't like that, okay? That's the 50% level. Okay? 50% Fibonacci retracement level of the third. You don't want it to go beyond that level. Reasonably. Okay. Yes, reasonably. $78.27. Even it can stop before that. It can be very shallow. To trade it again, all right, this is what you're saying. Mile power place chart. Okay, I've done it. So all these lines that I draw, those are the projections. You can just extend them, right? So look for trades a break below, retest and so on, find the support, okay, on the edge. Okay. Use common central line, like there's one here. Okay, I've already done it. So I've already done it. Okay? Right? You just leave it there. All right, so this will conclude our discussion today about how to avoid Elliott wave extension common trading mistake. If this video has been truly useful to you, please let us know by giving us the thumbs up. If you dislike it, mark it down. If you think it's an essential tutorial that can help other Elliott wave traders, feel free to share with your friends on Google+, Twitter, Facebook, and Tumblr. Our YouTube channel is 24 Elliott Wave. Subscribe today. And be sure to click on the notification bell so anytime we record a new video, you will be the first person to be notified. Sometimes I post video first on Facebook. My Facebook page is stochastic-macd. To learn more about Elliott Wave extensions, go to www.24elliottwaves.com. Until the next time, enjoy yourself and be very happy. The financial instrument that we are analyzing today is a Microsoft stock belonging to the technology sector, software infrastructure. Happy to you all, and I will speak to you soon. Thank you for watching.